Accruals and Deferrals by Bobby Scowden. Let's discuss the accruals and deferrals that are used in accounting. What is the difference between an accrual and a deferral? The textbook tells us that these are two basic categories of adjusting entries. At the end of an accounting period, a business will complete adjusting entries, which this may be quarterly, as most businesses do. Adjustments are necessary to measure the net income on the income statement and the assets and liabilities on the balance sheet. Let's discuss what is a deferral. A deferral is defined by our textbook as the cash payment before an expense is incurred or the cash receipt occurs before the revenue is earned. As we see, these could be prepaids, rent, and office supplies. For example, with office supplies, you would buy the office supplies before you actually use them, so this would be a deferral. There are two different types of deferrals: deferred expenses and deferred revenues. A deferred expense is an asset created when a business makes advance payment of future expenses, as defined by the textbook. Sometimes are called prepaids. A deferred revenue is a liability created when a business collects cash from customers in advance of completing the service or delivering the product. An example of deferred posting is shown here with rent, as the rent expense is paid on May 1st of $500, but the entire month for the rent has not happened yet, so it's considered a prepayment. Let's discuss accruals. An accrual is defined by our textbook as an adjustments or expenses before the cash is paid, or it records the revenue before the cash is received. This could be salary expenses, investment expenses, and utility charges. As we know, the employees that are working the 40-hour week, but we don't pay them until the following week, this would be an accrual. Types of accruals are just like the deferrals, with accrued expenses, accrued revenue. Accrued expenses is defined by the textbook as an expense that the business has incurred but has not yet paid, as we discussed earlier in the example of salaries. Accrued revenue is that has been earned but for which cash has not been collected. So you performed the service for the customer, but the customer has not paid the bill yet. Example posting, as you can see here, is the salary expense, as we discussed earlier, and also a service that has been performed, but payment has not yet been made. Let's discuss how this is used in the business world. An entry-level professional may use this journaling to determine what to report to upper management. There may be changes that may need to be addressed. A mid-level professional may use the reporting to determine if salaries can be paid. And an executive level professional may use the journaling to see an overall picture how the shape of the company's finances are to make decisions. Let's discuss ethics. As you see in the news in the last couple of years, many financial companies have been in big trouble with misleading investors. This is something that's called fraud. Scripture states, "Bread gained by deceit is sweet to man, but afterward his mouth will be full of gravel." Proverbs 20:17. Not only is fraud against God, as it is also man. as we can see in the examples here of white-collar crimes that have happened in the last recent years. This is involving big money and big jail time. Fannie Mae was found guilty of fraud in 2006 by the SEC. The SEC fined the mortgage giant $400 million for misstating finance statement from 1998 to 2004. WorldCom had a securities class action lawsuit of $6.1 billion. The CEO, Bernard Ebbs, was convicted of fraud and received a sentence of 25 years in prison. HealthSource had an SEC troubles as well, with overstating $1.4 billion for at least 4 years. 15 executives pleaded guilty to accounting fraud. Thank you for listening to my presentation. And here are the resources that were used in today's presentation. Thank you.